Good morning, ladies and gentlemen, traders around the globe. We from Admiral Markets say welcome to our real-time daily trading idea webinar. In this webinar, we have 5 days with 5 different traders, so with 5 different trading styles, and each trader show us today with the conditions on the markets and some trading ideas, and for sure answering here your questions. But first of all, please be aware of the risks. So here's our risk disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposit. So they maybe not be subtitled for everyone, and please be aware that all we are showing and presenting here today is just a personal opinion of our traders and not an advice for investing. Here you have a picture for me. My name is Tim Temp. I'm account manager here from Berlin here in Germany. And we have the pleasure here today with Dirk. He will join us in a couple of moments and show us what's going on the markets. Why Admiral Markets? Here you have a quick overview of some of our offerings. Maybe here, for example, our bestseller, the DAX30, with a typical fixed spread of only 0.8 point during the main trading hours. These and other products like Forex you can trade without any commission by Admiral Markets. So we are a global international broker, so one world global offices. We have license all over the world and offices around the globe. So what does it mean in detail? So you can ask our customer service. So, and here's a picture from Dirk. I say good morning to you, Dirk. I hope you're doing well. The screen and the stage is yours, so you can speak to us what's going on the markets.
Yes, good morning, Tim. Good morning, guys. Yeah, well, the picture says more than I look right now. Possibly is some kind of flu is really going around. Hopefully it won't catch me 100%. Okay, let's check out what is going on this morning in, for example, first of all, the German DAX. Hopefully you guys can hear me clearly, because the MetaTrader platform suddenly crashed down and opened up again. Tim, are you still there?
Yes, sir.
Okay, because some weird sound occurred here right now. Okay, let's see what's.
Sorry, no, but no, it's fine. Okay. So your sound as well, and hopefully by me as well. But I will mute me immediately.
Okay, of course, that sounded like you fell off the chair or something like that.
No, okay. No, but maybe yes, your words are stunning me, so all is possible.
Guys, let's start into some data. Yes. You guys saw possibly that some PMIs got published this morning. We spoke about we will be speaking about a couple of PMIs like the European data, the German data, Italian data, Spanish data, French data. And if you look at the PMIs, these are so-called manufacturing PMIs, they are quite similar to what is going on with China this morning, because they published the PMI as well, and this one went out with 49.9, so that's another one. It's a third straight month in February where this kind of a PMI is going down. So what does it mean? PMI is below 50. That's something like it signals a contraction. So that means it's a way of a little bit of negative to the whole sentiment. Nevertheless, from the technical aspects, and we will see the chart right here, of course, still we are on the weekly, and we will switch to the daily chart and just close that market watch right here and just have a look at the current status of the German DAX, because this one was like a rocket this morning and went up to test the moving average 200. Yes, and this moving average 200 is 100% touched, and you see that moving average 200, and I would just color that one here in blue, at 11,661. So this one got tested and went back down again. So let's see what will be happening with another, let's say, technical data like the resistances and the supports. If we see all these kind of resistances, they are already got tested. And you see that Admiral pivots, which you can find yourself by checking out your navigator and just implementing those ones into your platform. You see that one there is a lot of stuff like all these, let's say, tools mini chart, order history, period, pivot, Renko, and stuff like that, and you might be entering that one with a pivot via your navigator here as well. Okay, what will be going on the next, let's say, hours and even days? We spoke about a couple of markets last week as well, like indices, when we spoke about the SP 500. And I wouldn't say I gave you a warning, but I just said that we are almost scratching the top or almost scratching heaven and the ceiling. And it's like rates won't be mounting up like trees are not moving up into the sky all the time. And the reason is why. If you check out the current status of the trade deal between China and US, these guys, or let's say these two boys, Trump and Xi, they badly need to deliver sometime. And if you see and if you read, if you see videos, if you read a lot about the current preparations of that final China trade deal, you have the feeling that this kind of, and Mr. Treasury Secretary Mnuchin said that they are working on a 150-page detailed agreement, that this is not yet prepared in 100% in details. And it's still possible. It's still possible that these, let's say Mr. Trump is just walk away. It just will be walking away. And just imagine what will be happening if this guy just stands up and walks away and leaves that trade deal unsolved. Markets will be falling apart. I guess you don't need any kind of a fantasy what will be happening after that. Because if you check out the current status of the market and you see the DAX, you see this move. Like we see, even saw this move from the beginning of the year and even from the last low here, right here. Just check out this low at 10,863. So we are close to getting another 1,000 points going up the road. And if you check out the US data, let's check out the SP 500. As you spoke about that one last week. This one just went up in 2019 with 11.39% with the close of yesterday. So, and that's not a little bit of a yield joke. 11%, 11 to 12% in the green is just a wonderful start into a new year, and it won't be lasting forever. So this kind of a contraction is looming. Why am I talking about the S&P right now? Because you see the picture of the DAX that has to do something with the whole market construction. We spoke about the S&P 500 last week. We spoke about this blue, let's say blue trading box where possible short situations could be possible. And we spoke about this last Friday, at the same time. And quite funny, just to give it more significance, or just to underline that kind of a theory or of a way of thinking. All you guys can see the same chart like me. All you guys can see the tops right here. All you guys can see, let's say, the 61.8 retracement and the one retracement we just entered last week manually, so the 76.4. Needless to say that all these kind of retracements are useless when you don't see the so-called bumps here already. If the market is about to, let's say, try to test this level and try to overcome and try to jump through that, to skyrocket to let's say to the old record highs, something fundamental needs to be happening. And right now it doesn't look like that this is going to be delivered, because they are already speaking about a meeting between Trump and Xi in direction to the mid of March. So there's still a time to go. It's still time running down the river until there is something like a trade deal really hammered into details. And as we all know, sell the news or sell the good story or whatever could be happening before that. Today we have the first trading day of the new month, March. So a couple of flows, big flows from funds, ETPs, whatever, are going into the market. Could be on top of that the reason why we are just hovering in new levels this morning at the German DAX. But if you look at the bigger picture from the US indices, you might be aware of being prepared for a new let's say, move to the downside, and you can be really sure we'll be entering another shape, or let's say another ellipse. Maybe that's nice to see. Just try to do that. Hopefully that will work 100%. Not using that too much here. Just in case, I'm just doing that in the direction of the 2 days needle. We will be placing that one here. What will be happening is always the same. Bulls are trying to beat the bears. The bears are trying to find, let's say, some kind of stop loss management for them, some kind of a stop loss area for them. And needless to say, they are looking into the chart as well, and they look at the last highs, and they look at the high of 2817. They look at the high, the last one here, at 2813, and they try to find something between 2813, 2820, or let's say 2825. And if they have the firepower, they are looking way more up to the road to find some kind of, let's say, more room for a next short setup, so that they are not being killed by a spike up the road, a so-called short squeeze movement before the market goes down and takes the direction we spoke about last week. The target for this kind of a move, expected move, is first of all the 61.8 level, which we see at 2700s. As you can see right here, we'll be entering a horizontal line here. This one is going to be expected in direction to 710 to 700. That's something for the S&P. That would mean, if we see a movement like that, that would mean that we see almost the same movement at the German DAX here. And if you check out the data again, if you see on resistances and some stuff like that, and if you see the exponential moving average 100, which is at 11,345 right here, you would simply scratch your head, where is the first target to the downside for me with a move like that? Well, on a daily perspective, you got the pivot points right here. You can be having short-term research in a 4-hour or 1-hour chart and finding that are something like Fibonacci retracements to the downside, projections to the downside will lead and implement some targets for you. On the other side, if you look at the XETRO-DAX, the XETRO-DAX opened with a gap this morning. You could have the first target, natural target from the XETRO-DAX gap. Yeah, you see that one. Yesterday's close, XETRO, was 11,524.99, and this one today was the opening at 11,583.08. So that might be a nice first target to the downside, where you just, let's say, speculate on a so-called gap close on a XETRO-DAX basis. Okay. We spoke about a couple of currency pairs as well last week. First of all, let's just browse through the kind of markets we spoke about. Needless to say, a couple of moves. First of all, Bund Future. We spoke about the short setups. We draw that 61.8 here at 166.40s and went down already 165.19 right here. Nice move to the downside. We spoke about the EURGBP and spoke about a short setup. And the EURGBP is the monthly chart, and just shows you a couple of Fibonacci retracements from the bigger picture. And going to the more detailed, let's say on the daily basis, you see the projections from last week, and we spoke about these 138.2 and 161.8 projections to the downside here. And these are the first targets, or let's say the overall targets which we gave and spoke about. So this kind of a 161 would be the end of this move to the downside, which would be very close to that 085 handle. So 08480s are quite, let's say, the point where this kind of a currency pair could stop that move to the downside and turn around. So won't be touching that one today. Sometimes first day of a month moves are quite crazy. If you just speculate that there will be something like NFP data today, you won't be ready for that one. You might be changing that to next week, because the NFP data for February will be published next Friday, 14:30 CET. Just to give you a heads up on that one as well. when we check out EURGBP and cable and other, let's say, pound sterling, other pound pairs, for example, versus the yen versus the Swiss franc and other important currencies, you just simply give your heads up all the time. What is going on? What is going on with the political situation? What is going on with the Brexit talks? With the debates, discussions in Parliament and around the Parliament. And sometimes it could be even quite nice for you just to watch Sky News or just to watch another broadcasting station, just to watch what is going on in Parliament, how this kind of a debate is going on. Sometimes it's quite fruitful, and sometimes it's quite really funny to see how these guys are debating. Sometimes I wish they would do it here. Okay, let's check out a couple of other pairs. We spoke about the Aussie, which is going to the downside here. Speaking about the projection levels, which is quite close to that 070 handle. We have still a way to go, but at 61.8 here, around that 7120s, scratched to the upside on a daily basis, and might be on the way down to these projected levels. All depends what is going on with precious metals and another couple of commodities, because the Aussie is really quite, let's say, correlated to that one. If gold is rushing up, if silver is rushing up, and other precious metals, the Aussie usually is falling up the road. So should be aware of moves like that. Brent, Euro NOK, what I'm speaking, what did they speak about? A couple of other ones. Let's see, where's it? Euro US dollar. As well, we spoke about that Euro US dollar move to the upside, and spoke about a favorable setup that the euro might be scratching that 61.8 level here at 114, close to that 114 handle. That really happened that way, and like always, when we use that one for a short entry, a couple of boys enter too fast, or a couple of boys are with the stop loss room is too small, not wide enough, so they got kicked out with a spike and going back down the road in the direction which we speculated on the short side. Targets here might be this 38.2 level, and just inserting that one horizontal line, 38.2 is at 113.15. Okay, couple of things for next week, just in case. If you check out some current data, you see, for example, I spoke about the PMIs. On top of that, we got some labor data today from Germany. And so the unemployment rate is at 5.3%. And just imagine, same data came out from Italy, and the unemployment rate is at 10.5%. So I don't need to comment anything on that. You see the Eurozone has still a huge problem. A couple of markets are really well up the road, and a couple of markets are really, let's say, lost in that kind of a situation. Very bad. Nothing to joke about. Still a long way to go, and think about, we have next week's ECB meeting with a rate decision, and the longer they do that kind of current monetary policy, whatever they do with future monetary policy, that won't end the fact. Yeah, that won't simply end the fact. It's so-called the ask side, the purchases of consumers. This is not produced by let's say, monetary policy. You're not able to produce purchases from consumers simply by the fact with having zero or negative interest rates. That won't help. And the end of the road is that you simply crash a currency like the euro. And this is all you need to know when speculating in euro-US dollar. Every kind of a spike up the road when the euro is heading up the road might be an invitation of the market to go short back again. So that's just my attitude, my opinion, my personal opinion. Okay, Tim, I spoke about a couple of markets. Possibly there are, let's say 1 or 2 questions, or what is going on?
At the moment, they ask for gold and silver, and for example, maybe we can have a look on the oil sides, maybe WTI.
Okay, where is gold? Gold, I closed gold. Brent, okay, just check out the market watch. WTI, just opening a new chart. And that doing that on the daily. Just doing the long-term view first by implementing that FIBS. Nice color. Change that color. Just doing that in black. And trying to find some resistances for the next move to the upside. First of all, if you check EIA data published on Wednesday, you got surprised because these, let's say, the oil contract, WTI oil contract, which is the current one, which is important, is the May 2019 contract at the NYMEX. They got surprised by heavily use of oil, because they expected a build-up in that one, but it didn't work out. And Mr. Trump spoke about the OPEC and spoke about the oil price might be too high right now, and tried to, let's say, intervene with words, verbal intervention, so-called. That didn't work out very long. The only thing that worked out, you see that red candle here, that was the day when he did that. And just say the Saudis are back in the game, and by reducing oil outputs, and that all could lead just to the upside, a little bit more to the upside. And if you see the longer term chart, and you see that kind of the retracements you see with a 50% and 61.8%, you see a possible target to the upside between 60 and 65 bucks a barrel. So I will be just entering that kind of a shape where this is a possible target zone. So now comes the negative picture about it. That kind of a 60 to 65, let's say US dollars in oil is a target for the full year of 2019. So that's the average hedgers are calculating with. Even some fuel specialists at cargos or at companies like Lufthansa or Air France or whatever. So they're calculating with a 65 average oil price WTI in 2019. So it's quite interesting that we will be hovering sidelining something like possibly that doesn't look in the more detailed version on a daily basis. That won't look like a dead patient sidelining, but it won't be surprising something like happening like old highs like 70, 75ers. So that's all I wanted to say about that. So first targets from the say, let's say short-term to mid-term bias. It should be a long setup, and so it should be simply something like buying the dips. And of course, it's the first day of a new trading month. It's very dangerous to just step in today. Of course, possibly it could happen that we mount up 2 or 3%, but simply I would buy on bigger dips, and not. There's no need to rush into that right now. Oh, gold. Where is gold? Gold. What happened to gold? Did I delete the whole chart? Kicked it out? No, there's gold. So what you can see, for example, I'm just saying that you see all these kind of precious metals, 1310, silver 1555, palladium 1532, platinum 863. So going down, all these precious metals are going down. Then you see euro-US dollar, 113.60s, 113.80, 113.70s, still hovering around, and still have the feeling that this has to do with first of a month moves. So that doesn't mean anything, because the longer you see that today, I'm speaking about today, the longer you see that usual correlations between currencies and commodities are not working, the more you have the feeling, oh, it must be the first or the last trading day of a month, because markets are shaking out or building new positions. And if you look at the Fibonacci retracements, you might be implementing that on a daily basis from the last low here, August, going back up to this last high. And simply have a little bit of a patience, or prepare that one for yourself for, let's say, with a self-automated or with a semi-automated trading style, something like a pending order, and try to catch the first try here at this 23.6 level, which is very close to that last low, very close to all these lows you see here in the chart. So that might be the same, like we spoke about these typical catching these kind of stop levels, like we spoke about that SP 500 stuff a couple of minutes ago. So that might be working here as well, hovering around that 1302 level and trying to catch that, let's say, psychological level possibly of 1300, hovering around there and try to buy the dip here in direction to old levels back up again. So that would be the favorable strategy way of trading here. Would mean that we have something like a buy zone in direction of that 23.6 around it, a little bit underneath that, for a try over catching a bid and back up again. Okay, time's our limit, as we always say. It's 11:28. Hopefully you guys have a let's say, blue sky and not a gray sky like me. And hopefully you guys will have a fantastic weekend. In Germany, I don't know where you guys are all around. In Germany right now, we have the typical carnival season. So people go crazy. And hopefully you're not sick in the next weeks. And hopefully you have a fantastic, relaxing weekend. Thank you very much. And as you like, next week, 11 CT, same time, same location. Thank you very much.
Okay, Dirk. Yeah, thank you very much as well for you and all our listeners here who are joining us today. As you said, next week you are back on Friday and we are back on Monday at the same time with Jay, and a new trading week will start. And yes, so all have a nice weekend and good trades. We will see us. Bye-bye.
Bye. Bye-bye.